Hi there, this is Mark Sebastian, the founder of OptionPit.com with the Option Pit trade idea of the week. Reminder, this is for educational purposes only. Anything you hear in this webinar is for educational purposes only. Consult your financial professional, and options have risks. So if you lose money, it is your own fault. Hey, reminder, tomorrow, adjusting positions and managing risk starts tomorrow. It's just $147. 4+ hours of awesome education on adjustments and risk management. Time well spent. If you are a new, intermediate, or even an advanced trader, there should be something for everyone. In addition, that's where you can see my most recent webinar, Principles of Trade and Risk Management, which I thought was a great webinar. Go to optionpit.com/risk to get yourself registered. So let's talk about the market. Quite the vol crush today, despite the fact we're only really about $90 off the absolute panic low. VIX is $10 off the high, and the VIX cash is now trading at a full 50 cents below the VIX future. And although that being said, the Feb future 2310 is still trading at a small premium to March. So as tempting as it is to sit there and go short VXX or UVXY, there's still a little headwind because of this contango. So what does one do? Well, that's where things get a little interesting, is that, I do believe that volatility is going to drop further. But why? Well, it looks like oil is stabilizing and is probably going higher. I think a lot of people think that, the panic is over. I wrote a couple days ago, or actually yesterday, that we had an absolute vol panic in oil. Let me pull up a 2-year chart. I mean, on Wednesday at the peak, we absolutely panicked in USO. OIV got over 70. It was levels that we had not seen since, this absolute trouncing of oil from kind of October into February, right? And, as much as we've dropped in USO, I mean, this is a period where we dropped from 35 to 16. So this was a much more violent period, and then kind of rallied back to 20. So I think we're setting up for a rally in oil over the next few weeks and days. And I like owning oil to go a little higher, not a lot, maybe toward like 10. And I think that's the way things set up. So the trade I like as a way of playing oil volatility and a way of playing oil to rally is in February. All right. I'm going to look for kind of the cheapest option I can find back here. And February is kind of it. It's certainly cheaper than all the stuff in front of it. So I'm going to buy a February regular 9 call, and I'm going to pay 70 cents. And I'm going to be happy as a clam to do so. I may pay up to 71 just because of the way the market is pricing things. I'm going to lift the 71 offer. Paid 71 cents. And now my goal, I want to dump this at $1 to $1.05. So I'm looking to make about 35 cents, and I'll flip back out of it if it gets to be 50 cents. So I'm looking to make more than I lost, than I'm potentially willing to lose. All right, folks, if you got questions, you can email me, mark@optionpit.com. You can call me 888-TRADE-01. And again, go to optionpit.com/events or optionpit.com/risk. Check out what I have going on in the world. Everybody have a great day, and I'll talk to you soon.